All right, folks, we are live. February 29th, the last day of the month. Welcome from YouTube and Patreon. And by the way, I'm reading your comments on Discord, and I know there's a problem, which is the unlisted, so it's not showing up for the Top Guns. The live streams are not showing up. Let me think about that over the weekend. I'll fix it. Okay, it's fixable. It's not. We'll figure something out. But let's talk about the market a little bit here. PCE comes out in line, even though the month-on-month readings, those are still higher. Not based on expectations, because PCE expectations come out after the CPI and the PPI, so they're already priced all of that in. But the month-on-month readings show that inflation are going higher, even with the expectations that we got in the PCE. Now, the market, the way the algos work, if you get something as expected or below expectations, what you're going to do is a reaction like we've seen in the dollar, which is a pullback. If we look at the daily chart, it appears that the dollar is going to give up the 20 moving average. But like I said yesterday in the video, the support is right there with the lower Bollinger Band. So we don't expect a huge drop in the dollar and a flush down. We just expect that the dollar is going to stall here and maybe not rally as expected if the PCE came out hotter than expectations. So that's going to be pretty good for gold, at least to move a little bit. So you see gold moving. You see the gold miners finally making a move. But I mean, the test here, because they always stall. The gold miners always stall here. So we need to see them, the GDX, going to the 20 days moving average and passing above. And if it does, look, the upper Bollinger Bands is way up here. So we're going to have a lot of meat in the bone to trade GDX. It can theoretically go higher, even as the dollar is not really flushing down, just consolidating underneath its 20 days moving average. We can see a recovery, but we need to see at least some sign of life. I'd rather go with the individual name, to be honest with you. And I find out that the options for this guy more attractive than the GDX. If you take the 32, doesn't matter what time of the day, just when you see a trade like this, you take it. You're going to see pullbacks. We got some of that. I mean, you see some of these pullbacks, but again, the chart is really oversold in the daily, so that the gravity of the indicators on the daily will drag the chart higher, even if we have pullbacks on the intraday frame. I would actually view them as opportunities to add and to enter if you haven't entered already, absent of losing the open, which is 30.58. If we lose that, then okay, now we have something different. The gold miners are reversing. And of course, you're going to see every time when the dollar intraday catches a rebound, the dollar is not just going to go in a straight line to the downside. You'll see a rebound. As that happens, you'll see any NEM, new amount, and gold miners pulling back a bit. But I think that 32 is a good trade. And adding to it, so long as we trade above this line, as we pull back, is also a good positioning. You'll see some of the dollar-sensitive guys, FCX, if that's the chart that you want to follow. If you look at the daily chart, we've been trending in this downtrend here for a little while. Maybe now we can argue that we have somewhat of a inverse head and shoulder, and we can make it above this line. So Freeport looks a little more attractive than it was, let's say, a day ago, because it's flirting with the support, losing support. So now if we do this move, I think that Freeport should be a buy, and maybe you should target the 40 at the April expiration if you're trading options. If you own the stock, we just add to it. I think that we can, if you go to the weekly chart in Freeport, here it is. We can make a retest. If we grab the pen, we can make a retest to the actual sloping line that we've seen support and resistance at before. Not really support, but resistance. So we can go over there. I think that that's a possibility if the dollar behaves. And if we make the crossing from an intraday perspective first. So that's one chart we look at. Another one, Mosaic, that's not, I mean, you can still argue that this is bull flag and higher we go. We just need to close the gap. But until I close the gap or move above 31.44, I'm not interested here. Even though it's still promising. There's a lot of good signs in here, but we need to see a move back above 31.44 before we say, okay, dollar goes down, fertilizers go up. Now, what's happening with bonds? 10-year not moving much, by the way. So maybe the daily will play this correction here on the MACD and just consolidate for a little bit. But I think, again, when we hit the Marsh, I see this is a problem. That the bearish momentum in the weekly chart is already over. Unless, of course, we curl down and we try to snap down or make lower lows. I think that's only going to happen if there's a problem in regional banks, for example, or real estate. Then we'll see yields flushing down and rate cuts will come sooner, but that will be all for the bad reasons. So for now, my assumption is that in the weekly chart, we'll begin to move higher despite the daily pullbacks. In the meantime, since we have daily pullbacks in the 10-year, a DLT moving higher, any yield sensitive will continue to outperform right now. So you see the IYR, this is firming up. If you want to follow this trade, you can go all the way to 90, buy the 90, sell the 95. That will finish the trade. It is risky. It is risky because it's prone to the macro data. But right now, I think that the chart, technically speaking, has done this loop in expanding the Bollinger Bands to the upside. I see that as bullish behavior. And 90.95 makes sense, at least in the short term, while we see yields cooling off for a few days, maybe a week or so. You'll see it in the XHB, but that's already been bloated. You'll see it also in the XBI, but again, XBI been hot, so it needs to correct. So I see the IYR as the yield play for the day. The other one is KRE, of course, but that's always risky. It's above the 20, but like we said, the Bollinger Bands are really tight. If you're going to play a yield-sensitive play, I'd rather go with the IYR versus the KRE because we're expanding those bands. Still not my favorite. I don't want to bet that yields are just going to go down because that report, the PC, is still month-on-month hot. Anyhow, let's go to the indices. SPY. 3 minutes chart. Now, look, we talked in the morning brief about a 510. Now we got some bad data, I believe, from pending home sales. Is that play still on the table that we head back to the highs? If we look at the 4 hours chart, here it is. Clean up the chart. We are still in that bull flag formation. Okay, so whether that play happens today or tomorrow, we're still in that bull flag formation until we lose that. I'll give you the line right here. Losing that would be closing the gap, pretty much. So we go to the same high. This is the gap, the previous gap from yesterday. You see that's now offering some support right here. If we hold that line and we climb above 547.75, we're back on track. We just got an algorithmic reaction here. If we lose this line and then we go ahead and we close the gap here and below, then there's something different. And I will consider that as a reversal. But for now, I think that we got some algorithmic reaction here. We're catching some support. We go above 507.75, back on track. The bull flag is still in play. And the same goes for the Qs. Again, I don't want to get too excited here that, oh my God, we're going to close the gap and all of that. Because in the 4 hours, all of these charts are still looking as a bull flag play. And you can see it in the MACD, you see it in the RSI. So the longer time frames sometimes help you out. Even in the 2 hours, see, it seems to me that's curling up, right? So the longer time frames will help you out from your bias in the shorter time frames that you might misguide you here. So be careful because the bias is still to the upside. Few more plays. We talked about eBay in the morning. I still see that as a pullback trade, and I gave you the trade. I got into it in the morning just right before I got in the stream. 47.45, really cheap. It's not expensive, and you can flip few cents into $3. So I see the risk versus reward is worth it here on eBay to take that shot for a correction within the Bollinger Bands. The other one we talked about NEM, so we're done with that. Some previous trades, Amazon, I see a lot of risk with the trade that we've done based on the reaction that we have. Sure, we're back above 173.60. Can we hold on to the trade here that Amazon will reverse and go back? Maybe, but there was a lot of risk with this reaction because it came with higher volume. So there was somebody who's buying here in the morning Amazon. I'm leaning toward closing this trade, the bearish trade in Amazon, even though I still have a case on the daily, but just to be in the safe side, because my case on the daily, I mean, you know what it is, that we're losing momentum here. And we're probably going to cut through the 20. But this behavior and the volume that I've seen upon the open, the buying here, um, it just I lean toward closing the trade on Amazon just to be in the safe side. I'll give it a little more time. If we go down, take 173.60 in the next few minutes, I'll keep it. But if we climb back higher here, folks, to the highs of the session, I think I'm going to go ahead and close it. Another one from yesterday, net. What do you do with this guy? Keep it as it is. I'm keeping it as it is. It got a little bit of a pop after the software. Some software names went higher, but I think it pulls back. I think the daily chart's still not showing any reason for me to change this trade, so I'm going to stick with it here. Come on. There we go. We got AMC. I mean, any sign of life of this guy? Is it going to come back? Not really. That's toast. That's over. So AMC, we're not going to talk about that. That's over. Can you get into a new trade here that AMC might recover? Sure, but I mean, for me, the whole point is done for AMC. Some more trades that we got into in the week. Let me think. MicroStrategy. There we go. MicroStrategy. What do we do with this guy? Because we got the head and shoulder. Now we're gapping higher and maybe forming somewhat of a bull flag. I still in the trade. It's a losing trade, but let's look at BTC. We're seeing a little bit of a rebound here on the longer time frame, hourly time frame. The thing with Bitcoin is, let's just clean up all of this. The thing with Bitcoin is, over the weekend, you see these nasty moves where somebody pulls the trigger and sells. So for now, I see this wedge pattern, maybe a little bit of a big reaction. Then you see folks saying, oh, this is the opportunity to chase, but a seller will show up just like they did at these levels again. And if they show up, they give us a pullback over the weekend, maybe by today even. So I'm going to keep that MicroStrategy bit for now. Because you see here, clean up this chart. That's the hourly, the daily. The daily is insane. So I would still keep that trade since it has time. But if you want to hedge, if this trade, if you're into this trade, and I know most of you are not, because this is an expensive options play. Mara, if Bitcoin recovers, Mara could be a play where you buy the dip here, and that will counter. That will be a hedge against MicroStrategy, because it's holding the 2619. Where is that coming from? Here it is, support before. So if Bitcoin holds, the assumption is folks are now looking for cheaper plays to chase Bitcoin. They could be buying the dip here. So buying some calls here could be a hedge against the MicroStrategy play. If you have longer MicroStrategy puts, you buy shorter term calls in Mara, and that would be a good hedge for it. What else do we have? Let's look at the big caps, because the big caps are not really performing that well. You look at Apple, 3 minutes chart here. Okay, we got closer to 182.66, but I'm not impressed here. I think that Apple continues to get these sell orders every time it tries to rally. So we'll stay in the bearish side on Apple, and that's probably going to be a drag on the indices, because if Apple rallies, it'll just lift everything with it. Tesla, lots of you are trading Tesla. What do we do with Tesla? Again, this seller, man, there's a seller here that keeps showing up no matter what you do. Let's go to the 5 minutes. Maybe that'll show it better. Here it is. So you see the seller showing up here above 202.5 and showing up again. But is it time to short this chart? Not really, because we have to take this gap of support before. And that would be, I mean, if we take the close, to be conservative, we take the close, technically you take the open, but the close here is 199.35. If we take that out, then okay, we can talk about possibility of downside coming for Tesla. But right now it's just, we keep saying this, we're seeing the same phenomenon of the seller showing up at these levels. If you look at other names, Microsoft, again, losing 408.75. So the big caps are not really that impressive. They're not reacting impressively to the PCE. It's rather the yield-sensitive names. If you look at them here in the full chart, it's the regional banks, it's the industrials, the real estate, energy, metals. Not quite the technology sector. Sure, some of them are moving higher, but not impressively as the participation that we see here in the yield and dollar sensitive names. Then you look at NVIDIA, of course. NVIDIA, we talked about this. We're not going to, here's the hourly chart. We're not going to assume that NVIDIA is correcting until we lose 771.62. Now we see the gap higher. What is the risk? Is what we talked about yesterday in the show. The bull flag. It could be playing out. So for now, NVIDIA, just keep it as it is. If it continues to go higher, this is a 2 trillion stack, it will lift the SPY. So we go back to the SPY. Caught support. If NVIDIA continues to trade good, SPY will be back on track above 507.75 and we'll be back above. We'll talk about the bull flag playing out. So this is why I say that be careful. Shorter time frames can give you a certain bias, but then always check with the longer time frame. And if you look at the hourly, this MACD is about to cross. To me, I see it as an opportunity to go ahead and buy some short-term calls in the SPY. Whether it is 510, 58, whatever float you bought. But we lose this gap support, then okay, we have another play in hand. But always check with the longer time frames, specifically the hourly. Okay. Anything else we forgot to cover? I want to look at energy a little bit. So Exxon, it's another play that we were engaged in. Exxon, what do we do with this guy? I think you still keep it as it is. It's playing out. It's getting closer to the 105 target. So I'd leave Exxon as it is. It's working fine. Let's look at CRM really quickly. CRM, and then we'll do Snowflake. CRM flattish today. Was supposed to be down, but flattish, and there's no play for us to do here. Even if you get the intraday chart going back and forth, but all what it's doing here is just killing the volatility. So the options will be cheaper, but I'm not sure. With this reaction, I'm not sure which direction I should be betting on. I would lean toward the downside just because that was the initial reaction to the stock. But you got to take either the highs here of this consolidation or the lows before you unlock a trade one way or the other. And right now, I'm not seeing it. Okay, Snowflake, is that going to be Palo Alto and just we recover? I doubt it. I don't think so. I think this is a big reaction here that's going to stick. Maybe you'll see tomorrow some recovery just to catch up with the Bollinger Bands, but not a dip I want to buy until Nancy buys it. Otherwise, leave it as it is. Speaking of, here's Palo Alto. Even with Nancy buying the dip, this is not looking pretty good here. So I want to stick with that 300 trade. Frustrating, sure. But I think it's going to be more frustrating for the folks who are chasing this trade just because of Nancy. They got into here with higher volatility. Now volatility is dying. And if we trend down, they begin to capitulate their positions and we see a bigger flush. So I want to stick with that position for a little longer. All right, let's take some questions and we'll keep it at the SPY here. 5 minutes. Yeah, 5 minutes is good. Okay. And folks, again, if you're watching from Patreon, please click on the link or go click on the YouTube link. It's going to open YouTube. You can comment just like you regularly do. So let's do, thank you so much, everybody. RTY. Many futures for the Russell. This reaction is peculiar by the Russell because you get the pop from the PC and then kind of gives it up. And we'll see it also in the IWM that we got 205.49. And it's looking a lot worse than the SPY from an intraday perspective. Is that because we have a double top? Maybe. And somebody's picking on that and saying, okay, this is the time to get out. But this is an interesting reaction because look at what the SPY is doing. It's a lot better. The SPY at least try to rebound. Qs, all of these now. The risk, of course, is this is going to be an inverse ABC. But for now, you can see that the IWM is the underperformer, not even rebounding after the algorithmic reaction that we got. I believe it came from from pending home sales. That was really bad. I mean, that reading was horrific. So I think that kind of shook out the algos. But for now, RTY. If we look at a longer time frame, because again, the bias in the 5 minutes, you could say, okay, we're going to reverse, etc. But then let's look at the longer time frames. This one is a little overbought, unlike the SPY and the Qs. Maybe that's the reason why we're seeing the RTY having a bit of a hard time. I mean, look at the look here in the 4 hours, right? A little overbought. Then you look at the SPY. That one is looking a little different, kind of curling back up to go back to bullish. So RTY, maybe it already exhausted the move ahead of time and now it's ready for a break. I would still not bet against it though, because in the daily, you still got surging bullish momentum in the MACD. So maybe it was stalling. That's how I put it, stalling. But you got no permission to bet against it yet until we lose the 20 days moving average. My USD short, GPY long starts to show momentum. Playing on JPY, this is the yen futures in May. But you know, the yen firmed up because of the Bank of Japan commentary overnight. And then you have the PCE, so the dollar goes down. That's going to work out for you for now, but you want to watch that the dollar has support. So you're not going to depend on the dollar going down for the trade to work out. You want to depend on the Japanese yen actually doing its thing and moving higher. And right now, facing a little bit of the 20 moving average here. But this move by the Bank of Japan, the commentary, I think that's going to stop some of the Japanese stocks and the Nikkei. That now the Japanese yen is moving higher. So you look at Toyota. We talked about this before. Could have been a good trade for a pullback, but because of the Nikkei going crazy, it just keeps going higher and higher and higher. But maybe it's the time, now that the Japanese yen is going higher, that this trade for Toyota, again, it's a classic name. It shouldn't be trading this way. Maybe it is time for this trade to be to face a pullback. And in that case, we'll probably take, I'm thinking about it. I don't want to commit to it yet, but it's probably going to be the 240. Let's see how come spreads are okay. If we do the 240, 220, it'll cost us about $350. But the profitability is pretty good. 220, we're not going to get anything out of it. So if we move to 230, 220, that's a little too soon. Let's do 240, 230. That's a little better, 240, 230. 240 pretty much in the money, 230. So you get a $10 gap, and you can make $700 as profits. So you can see the profitability here is pretty good if we get a pullback. Confirmations. Can we look at this chart and find confirmations of the daily? No, unfortunately, because it is a Japanese stock. You can only look at the weekly. And if you like the shot, you take it. And your confirmation is the Japanese yen. We got some Palantir. Let's do Palantir. I don't think those are going to do pretty good, though, because if you look at what we talked about yesterday, Palantir, it's above the gap. So that's a problem, right? It's above the gap already. And we're far. My strikes are at the 20. I don't know what your strikes are, but I'm at the 20. So I'm already way, way too far. The trade is already dead, absent of America. Now we're facing some resistance at the 25. Is there a sign of life that maybe we should average down on this trade or maybe do a new one? I need to see some sign of a reversal. So right now, maybe a rejection of this line, 25.11. Losing the gap will be considered as a reversal. Okay, and then if we go down to 23, okay, I'm going to add more. Look, we got 15 days or so until March 15th. Anything could happen. And this is a high flyer. But if it goes above 25, I wouldn't say close the trade because it's already pretty much worthless, at least for me. But I would add to it if these things happen. If we begin to see reversal signs, we're not seeing them right now. So we'll just keep it as it is. Is there a play for the VIX coming into March? Probably, but like I said, we need to see it closing above the weekly first because I don't want you to waste money betting on the VIX without the confirmation showing up. So right now, we're still short of the 20 moving average of the weekly. If we close above it from weekly basis, and you can see previously, every time we closed above, we got a move higher. Here, here, none here, but you can see here, once we close above, we get a move higher. Here, closing above, once we got it, we got to move higher. Here, here, right? So every time there's a closing above the 20, we get a pop in the VIX. So right now, we don't have it yet, so it's too early. If we get it, we might get it by beginning of the month, tomorrow. If that is the case, then we'll go with it. So for now, it's a little too soon. What is your Palo Alto trade? Palo Alto is just the 300 Marsh puts. That's really it. Let's do the intraday chart. Here it is. And I think that, at 300, they're pricey. They're not cheap. But for now, since I'm seeing signs of, seller showing up here, seller showing up here, I want to stick with that trade for a little longer. If you look at the hourly chart, it seems that even in the hourly, we're kind of about to lose some of that momentum that we built up. So I want to stick with that trade. I still like it. What I don't like is the Amazon trade, though. So let's take a look at that one here, see if we got a confirmation or not. We're back at the highs, folks. Again, can we be a little more patient, see if it goes down? Maybe, but there's high risk. So assess your own risk if you're in it, and if you see that it is suitable to close right now and assess later, that's your call. I'll keep it for now for a few minutes, and then I'll make a decision on it. Apple, no move, and SPY. It passes above 507.75 and closes above, let's say, from a 3 minutes or better yet, 5 minutes perspective. Then you're back on track. Okay, you go with any bullish calls you'd see for, I would go with tomorrow's expiration. I would not go with today. Go with tomorrow's expiration. If, on the other hand, you see that if you look at the time frame, 3 minutes, 1 minute even, if you begin to see that it's a no-go, that we're giving up. So here's an attempt, number one. Here's another one, right? If it begins to give up on this, then you have something different. You have somewhat of an inverse ABC. And we close this gap here. For now, too early to say, folks. And I'm still leaning toward SPY goes higher. So give it a bit of chance before making a decision. Keep them coming, folks. Keep them coming. Any questions, any setup you got, let's talk about it. Can we bet on the VIX via puts? And what calc we should make before initiating the trade? You want to bet on the VIX via puts on the SPY, that is. Again, I would look at the same thing, by the way, same setup. So the VIX closing above the weekly moving average would also translates to, okay, we have something brewing in the SPY. We have a pullback coming in the SPY that's more serious than before, because we've never seen the VIX really closing above since October. That was the last correction. So you close above the weekly. It doesn't matter whether you buy VIX calls or SPY puts, it's the same thing. But of course, when it comes to SPY puts, they're cheaper now than if the VIX was trading at 20, right? So when we see beginning of signs that we're going to close above the 20, that's when I want to begin buying some puts on the SPY. And I think that the surge in volatility will be rapid. So it's not going to be amicable. It's going to be rapid. But we're not there yet. Okay, we're not there yet, and we could also continue to go down for a week or two. And I don't want you to jump the gun here. So let's just wait for that signal to happen. And the weekly is 14, so it's not really that far. But let's just give it a chance to happen, and then decide on whether VIX futures calls or SPY puts is the appropriate play. Google puts 136, 131 for March 8th. Close, move to March 15th, or just let it run. So you got 136, 131. On which ticker, though? With the one with the L or no L? Because we talked about this yesterday. Google is weak. I mean, it doesn't matter which one you look at, really. This one trading at 137. This one 138. So it doesn't matter which one you're looking at. I mean, just look at the reaction today, which you think that these big cap names should be trading higher. I see Google giving up here, getting a gap and sort of a crap. If this continues, if we cut below, let's say, the open of this candle that we got today, I think that we close the gap and we're back on track because, again, it got closer to the gap and couldn't close it, and that's usually a bearish sign. So you have a decision to make tonight. If you see that these lows are holding and Google is moving back up and wants to challenge the gap, then probably in the short run, if you roll to a longer expiration, you're still susceptible to the decay. So maybe the trade would be take it off and then open it later on. If we take the open, then we're going to go down and close the gap below and we're back on track. What I would say about Google, though, just so you'll be in the loop here, look at the Bollinger Bands. That's going to be on the daily. That's going to be support. Unfortunately, that's how charts work because you need to consolidate a little bit here to allow the bands to expand to the downside, and then we can drop more if there's a drop. If you look at the weekly, though, there's plenty of room, but you need that daily to open the path for the weekly to play out. You see the same setup in Apple, by the way. Weekly suggests that we're going down, and Google suggests that we're going down, but on the daily, it cannot guarantee that we're not going to try to bounce a little more and retrace some of these losses, at least in the daily. And if you have a shorter time frame, which March 15th this kind of is at this point, we only have 15 days, 2 weeks, less than 2 weeks. The decay could be enormous just for any rebound. So keep that in consideration. If you the kind of trader, you want to place a trade, you don't want to manage it too much, then you probably go into April. And you add one increment, and any rebounds in the intraday session would not really matter to you because you're going to add another increment when these rebounds are done. Otherwise, you get out of the trade and then place it when the time is closer to being correct, when we see the Bollinger Bands expanding a little more on the daily chart. It's not a bad trade. It's not a bad trade. It's just the time is bad. The time you got from March 8 is way too soon. And if you move it to March 15th, same thing. It wouldn't really help you that much. What do you think about Boyle? 15 calls. The March 15th call debit spread 17.21. Here's the daily. And yesterday we talked about Henry, so we always need to check with the Henry Hub. And if we're above the 20, then we're okay. We're trading above right now, so we're okay. If you go to Boyle and you take the March 15th, you have the upper Bollinger Bands at 22.70. So maybe this is why you're selling the 21. That's good. That's pretty good. And then you have the support at 17. So that's the point where you're buying. I think that your trade is pretty good. When do you exit, though? You lose 17. You lose the 20 days moving average. You got to close it because something else is going on. And the decay on this guy can be big. But for now, I think the trade is fantastic. It's the exact ones that I would do, looking at the chart here and the boundaries. Okay, we looked at Boyle. Again, 18.5, it's okay. 18.5, it's okay. But like I said, watch the 20. Any problem with the 20, we have something else going on in Boyle. You see the volatility here, but for now, it's still on the bullish side. Hey, Mav, can you look at Adobe? 550, 555 calls we took last week for 15th. So Adobe, if we look at this chart here, if you got the 550, 560, I mean, the chart is not bad looking on the daily chart. Look at the 200 MA. Let's see where it is. But there's still the threat of this pattern being a bear flag pattern. How do we escape it, though? I think that we need to take the highs ASAP. So if we want to give it time, if we want to give it the benefit of the doubt, we have a high here at 570. We have a high here at 565. Let's call it 566. We need to get above this line ASAP for the trade to be workable. It's still on the table. It's not a bad trade. It's already in the money, so the decay is a lot slower. But I want you to look at the hourly chart too. And we don't need any of this here. Goodbye. Right now, what do we see? So we got the 566. and we faced some resistance. We pulled back, and now the behavior of the chart says it might have found some support here. Okay, now the next test comes. Since you got your bottom here, you got your support, get me above 566 ASAP. Then we got a trade going on. If we trend down, we head back to that support, then the chart doesn't have it. So you'll know right away from the behavior of the chart, looking at the hourly, looking at the intraday frame, that the chart has the energy to make the journey above 566 or not. And right now we're gapping above. Let's do the move. We're good. If we crap, go down to the gap, nope, then we have a problem. We're going to take it off. Meant specifically for VIX puts to take advantage of the consistent VIX crush we had minus those few days. Yes, but everybody's doing that trade. Everybody's buying puts in the VIX, so you'll find out that they're expensive. They're not really that cheap. So here's the example for you. If you go UVXY puts, everybody's buying them now by default. So let's say that you do one for tomorrow. Now we're trading at 679. If you go to 6.5, I mean, it looks cheap, right? For a weekly, it looks cheap for a few cents. I mean, that's probably not going to happen, 4.9. But if you go to the 15th, just assume that volatility might drop down. Again, 28 cents, $28, but the stack's trading at $6. So it is really expensive, even for the UVXY. And then the other thing is, it might be your luck that you buy some puts in the VIX, and then that moment the VIX pops higher. A lot of bears will thank you for that, but what is the point here? To raise a couple of bucks, right? To raise, I mean, unless there is a huge drop in volatility, you're already down at the close to the bottom of volatility. The bottom of volatility has been 13 and a half. So how far lower can we go? 12? I mean, that's hard to see. The market has been rallying aggressively, and we never really got to 12. So you're at the bottom of volatility right now. I think what traders do is intraday trading of the VIX. And usually they do it via VIX futures. And what happens is like today. So today we had some bets, hedging before the PCE. And then when the PCE came out, the hedging was taken off. So traders buy puts right away in the futures, take it off, they're done with it. Tomorrow, we might see the VIX moving higher, gapping overnight. And then somebody buys the puts on the futures, and they take a drop down, and they close it right away. So folks are trading puts in the VIX and intraday. Those are smart traders. Folks who are just shorting volatility just to short it, that I think that's going to be part of the problem when volatility increases in the month of March. Here's the SPY for you again. Are we giving up? Right? Are we giving up on 547.75? Let's look at the intraday frame. It looks like it. Give it a little more chance because you have to look at the hourly chart. We need to see the hourly worsening. And right now, I am not seeing it, folks. I'm still seeing the MACD here turning positive. So be careful. Yep. Let's be careful here, a little careful. What is your thoughts on the national debt? That's a longer problem, of course. If interest rates stay higher, and the assumption right now they will stay higher, at some point that's going to be a problem, because $1 trillion in interest payments every year, that's too much, more than the Defense Department. Okay, so everybody now assuming, oh, the Fed is going to cut rates, they're going to cut rates. But if they cut rates for the national debt only, and to relieve the government from paying interest, what happens to inflation? It comes back, and then we have to tackle the problem with from a worse place. So if we keep rates as it is, I think the next move by the government will be increasing taxation, regardless of which administration it is, because they have to. They have to increase the revenue. If you increase the taxation, would that be good for the economy? Would that be good for the stock market? I don't think so. So that's one issue that we're not talking about right now, but we're going to have to talk about. It will be really interesting as we head to the election season if that question comes up. Of course, the media, unfortunately, they're stupid. They're not going to ask the candidates these kind of questions. They will ask, oh, my God, who did you sleep with last night? Who did you. but they're not going to ask what happens to the national debt and the interest payment. And how are you going to tackle that? Are you going to force the Federal Reserve to cut rates with the risk of inflation looming and still with us? Or are you going to increase taxes, Mr. Biden, Mr. Trump? I would love to hear the answers to all of these questions. Frankly speaking, I don't think neither candidates can really answer them. But it'll be interesting if somebody really asks these questions. Anyhow, folks, we're looking at the SPY right now. You know what your targets are, so let's give you some numbers. I would take the high here because this is the ultimate high. Or let's keep it simple. Let's take the low of today since this is the trading. Low of today, 506.81. If we take that out, then we have something different. Something really freaked out the market right here. And we're going to go down and close the gap, and that will be, I think, that would be a bad sign for the SPY and the Qs and all of them heading into March. On the other hand, and I'm still keeping an open mind that the bullish scenario will win at the end of the day. If we pass above 507.75, you want to go with intraday calls or tomorrow's calls because usually they want to close the month on a positive note. They want to start the month on a positive note. You know how they play these games. So I'm sticking with that the risk is higher, not lower. You see the SPY right now moving a little higher. The Qs, let's look at it here. Same thing. Again, I think that number, that pending home number was a disaster, and I think it freaked out the algos, but I think we go back on track again. IWM, a lot of you want to short it here, but hold your horses, folks. Hold your horses. We need to see more damage. Right now, I don't think the PCE done the job. You have Fed commentary coming out, and you know what they're going to say. They're probably going to talk a little more bullish based on the PCE. The next piece of data coming out next week, not this Friday. So now we're going to position ourselves for the Fed meeting, the FOMC, and the next CPI as the PCE comes out of the picture. But I think that we begin to price that in maybe later tomorrow or next week. For now, I think that I'm just gonna stick with my my call here that the risk is still to the upside. We're still here, folks. We still got about a few minutes here. If you want any question, what are your thoughts on the SPXU? Right. Okay, it's SPXU. If you want to play that one, you can play puts on this guy. If you want to play just the SPY going higher into it for just the short term, for tomorrow, for today, you can play some puts on those. But with the VIX going down, you might as well just play SPY options. This guy will come handy when we talk about volatility going higher. I'm just not there yet. I will be there once the VIX closes above the 20 weeks moving average. Then I'm probably going to own some shares of this guy, SPXU. Just rent them for a little while. And we're probably going to see a sharp correction in the market, and this guy goes to 9, 10. Some of these call options trades will be also really profitable. But not right now, because we explained that the options on the SPY, you pay a little more. I mean, here it will cost you $4, $5, but given that the share price is 7, it's actually, you pay overpaying. On the SPY, the options are better. For today, again, folks, for today, I'm still leaning that the bullish risk is the dominant one. But we have lines to look for. We pass above 507.75. I think you should be trading some at least short-term SPY calls, SPXU puts, if you'd like, right? But if we take that line here and we identified it 506.81, the low of the day, then we can play some put options. But I'm going to lean toward the call side today. I heard other candidates say that we are unlikely to go into a recession this year due to the election year, as politicians will try to keep the market green. But next year is a whole different matter. Agree? Look, I think folks put a lot of stock on it's an election year. It has to be up because the politicians have to manipulate the data. How does that happen? Let's break it down to the real life steps. the administration grabs the phone and talks to government agencies to cook the data. Okay, that's one way. They do that all the time. But to keep the market higher, you need to call JP Morgan and the hedge funds and the investment funds and urge them to buy because, I'm going to give you tax cuts next year and such and benefits and all of that. I don't think it just works that way. So folks keep saying that, but I think it's more of the thinking of investors that it's an election year and it has to be up, so they keep buying. It's not really that something is happening behind the scenes that is nefarious. I don't think that's the case. We've seen crashes in election years, 2007 to 2008, 2020. We've seen crashes before, so I would not really think about it this way. I would just look. Everyone forgets that 2008 was an election year. 2000 was an election year before that. So you got to take that with a grain of salt. Just look at the market dynamics day by day and the macro day by day. And look, I think there's an irony to it. A lot of folks have been bragging about Bidenomics and how great the economy is and inflation, this and that. I think that there is irony coming where we will see the market a lot weaker before the election. That's just my call. I think that we'll see the economy a lot weaker. We'll see the market a lot weaker. We'll see inflation a lot hotter. And it's going to be all this talk about Bidenomics will bite them right in the ass. That's what I think is going to happen. Apple losing 181. Yes, it is. And again, Apple, look, got a pump, failed, got another pump here, failed. So we want to stick with that short side for now. But just keep in mind that those Bollinger Bands, if we don't crack below 180, if we close below 180 for the week, I think that's going to excite the algos of, okay, you know what? Apple gave up the 200 days moving average for the first time, really. You see the rescue here, another rescue here back in SVB. If this one is the real break with no rescue, that's a huge change. And the gravity of Apple, people right now say Apple not important. It's all about NVIDIA. But gravity of this guy, if it flushes down, even just to revisit the lows here at 165, 166, the gravity of that move will pull down the indices in a big way. So Apple is always important. And right now it's on the weaker side, so we're going to stick with that. I want to look at Amazon, see where it's trading right now. Stalling a little bit here. I'll wait a few minutes if it goes down 173. But look, if Amazon goes down below 173, along with Apple, then we have something wrong going on with the indices. And here, look, we give another test. I'll be patient. We all have to be patient. But you guys know if I leave in 5 minutes or so, you guys have your numbers here, and you know exactly what to do. If we pass above a 3 minutes time frame, 5 minutes preferably, you want to buy some calls, intraday calls for tomorrow. If we pass here, you want to go with the put side. So for now, we'll just watch it. Dixie went in the green. Charts for let's talk about ZS because I was interested in that too. Zscaler. The problem with these, look, I mean, this guy kind of crapped and came back, filled the gap, but still below the 20. And if you look at Snowflake's earnings yesterday, I think a lot of the problem with these companies right now, not the big ones, but the smaller ones in software, the profitability is going to be a challenge. So if you look at the financials, net income has been negative for a while, and it's still negative. I don't think that this is going to improve at any time soon. And this report, if it shows negative income, an increase in costs, which I think a lot of these software companies are facing right now, I think we have a reaction to the downside. So that's what am I going to bet on it? No, but because if you're not really sure about earnings, or if you don't have a trade that gives you exposure to both sides, you're really rolling the dice. Sometimes that pays off, though. A lot of folks bought put options of Snowflake yesterday and they got paid. So, but right now, I think after this climb and failure to close the gap, failure to climb above the 20, I think that the evidence is mounting that the reaction will probably be to the downside more than it is to the upside. Dixie went in the green for the day. Let's look at that. Yeah, that's a little concerning, to be honest with. That's what's setting the market right now. Why is the Dixie higher? I look at the macro data. I don't think we got anything new. Got jobless claims, but that's not really the upsetting factor. So this is an interesting move. And if you look at my boy here, probably got hit. Nope, still holding. I'm impressed, honestly, that GDX is still holding. But this move in the dollar, that's problematic. I don't know what caused it. We got pending home sales, we got jobless claims, but that's about it. Although, look at the dollar getting a little overbought here. So if it begins to pull back, I think the SPY will make it above the threshold here and be back on track. Tesla, new low of the day. By the way, gonna go skiing this afternoon on Elon money. Good, but you got to book it before we go, because I got an appointment too, so I'm gonna go. But this is the slope that you skied on. Hopefully, you made some money. And if you look at when do we book profits here, I would say this line. Let's identify a line. If we go to the high of this 199.90, we're almost there. 199.90. That's it. I think if you took a trade in the morning, that's a pretty decent trade. If we crack below that line, then we can have 195, 190 trade that we can play with. But I think for now, if you just took the trade in the morning, you're doing pretty good. Would you find it ironic if JP's Senate hearing is the catalyst that causes a reversal? Supposedly, same time of this bull market run was started. Could be. I mean, the problem with Jay Powell is, he was on the right track. He was more concerned about reviving inflation. He wanted to be Volcker. He was tough on inflation at any cost. And then at some point down the line, they talked him into believing into this fantasy that, you can defeat inflation but keep everything higher. And now he's seeing some of that happening, at least in the meantime. And he's believing that more and more every day. And that makes him a very dangerous Fed chairman, because he's detached from reality. And we'll look at the PCE, by the way, tonight in the program. I'll show you that the month-on-month readings in the core PPI, or PCE, core PCE, that reading month-on-month is still showing that inflation is going higher and rebounding. So there's a lot of risk here. But again, who knows what the Fed is thinking? Probably corrupt kind of thinking, not what interests the public. But anyways, give us some more questions, folks, if you got them. And again, if you're watching from Patreon, folks, just click on the link. It'll get you to YouTube. You use your YouTube account. You can comment. You can join the conversation. CCJ, appreciate your perspective. Long-time holder. Yeah, me too. I wouldn't say I'm a long-time holder, but I've been holding this guy. I have the 40 puts, which I think that every investor of CCJ needs at this point, because if we do snap, we don't want to wait till we go to 35 and then, we missed on all of these gains. So the 40 puts are really important to have. We've been holding for now, and you can look at the hourly chart and make a case that we've retested this line over and over and we're ready to go higher. But again, for that to happen, you need to take some of these reactions, these rejections that we got. We need to trade above those before we say that we're out of the woods. Now, if you look at the weekly chart, this is the one that scares me, to be honest with you, that this could be here a topping in his shoulder, that we go down to 35, rebound, put in a topping in his shoulder, and we go down. And this is why I say it is imperative that any shareholder of CCJ to have the 40 puts. That way, if this happens, you get out of your shares of 40. At least you booked some profit from the trade. But keep that perspective in mind. You see that the momentum is being lost. Some recovery showing up here in the RSI, which is good news. But I always want to be in the cautious side and have those 40 puts. You can buy them for March 15th, and as we get closer to expiration, you can update them to April, or you can go with the April if you're comfortable with that. I have the March 15th. If we're a weekend and I need to update them, I'm just going to go to March. But every investor of Cameco needs the hedge. Palantir wants to give up. Palantir will depend on the IWM, the behavior of the IWM, because it is also part of the small caps. And again, when you say give up, you're right that the chart here got to the highs today. Not the highs really, but it got to the resistance 2511. And it seems that it failed, right? So it got rejected. Went in, retested, couldn't make it, and now it's making a lower low. Okay. Now we'd like to see that the gap here is lost too. If it is, then we're back on track. But I don't want to average down too soon. I'd like to see a loss of this gap here. Right? I don't know what your strike is, but I need to see some losses here. And if we begin to go down to these territories of 23.5, 24, we're in the first week of March, then what I'm going to do is just roll the trade to a longer expiration, add more week, just to give it more time to play. And again, as the chart continues to go down, the volatility will increase. So the value of these puts will also appreciate. But today is a good sign that, okay, maybe it topped here and it's reversing. So it's a good sign, but not quite decisive yet. Another way we can look at the chart, by the way, if you see it here, since this double bottom, we've been making it's quite of a trend line here. You can see the reactions. So here you got some reaction. Here you got a reaction. Then you got it as resistance here. You got a reaction here. And now we lost that trend line. So yeah, there is sign of weakness. I'd love to see closing below this gap today. Now for me, that would encourage me to be more engaged in the trade again. Will the Ellen Bond-O-Rama start again in mid-March? Could be, because look, that deluge is coming. The deluge is coming. It's just the last few auctions were bad. So that's another risk that a lot of folks are not paying attention to right now. But I think March to May, that's when we're going to get a new update on the issuance. DUOL, that's one of the hottest stocks. What can we do with this guy? The answer to that is, I mean, look at this. You got a correction out of it, but now I would not really find it, to be honest with you. It's outside of the Bollinger Bands. It's crazy, but what's going to happen here is if you buy puts or calls on it, it consolidates to allow the bands to come in, and the volatility dies. So unfortunately, these kind of plays, we stay out of them because the volatility right now is really high. As it consolidates, volatility dies. So just leave it alone. What do you think of BSX calls, Boston Scientific? Outperformer of the year, but we got a little bit of a correction here. Look, I think we are in a process of a correction in Boston, and we're losing momentum in the MACD. We have negative divergence of the RSI. I think maybe you're too late to the party buying calls on this guy. I think you need to see it to correct a little bit more. Of course, you got the lower Bollinger Bands, 64, or you got the gap right here. I would not jump to buy calls here. I think if I missed it, I missed it. I'd like to see a correction and then hop in. I think the name is correcting. Now you look at the weekly chart. It's the same thing. It's way too hot. We don't want to buy calls when we're here because we're chasing too late. The gap between the 20s is way too high. No. My call is no. I have puts in BDX. More downside to come. BDX, I'd love to look at the weekly chart because this is not a big mover in the daily chart. It's a really good dividend stack. If you own this stack, how much does it pay in dividend? 1.5, not bad for a stack that's been static. Now, do you have a thesis against it? Because if you do, I think that you should stick with it. Obviously, from a technical standpoint, it's a bear flag consolidation, and maybe we're going to revisit the lows, but this stack doesn't move by a lot. It's a slow mover. So I think if you made profits from your puts, maybe you want to consider trimming some here and just move on to another trade. But you can argue again that this is maybe a topping in a shoulder, but I think these kind of stocks, they snap when the major indices snap. For now, you'll have limited gains. Maybe the lows here, 220, but that's pretty much it. Hey Marv, just today my grandparents gave all of us grandkids 10K. What would you suggest putting it into in the next 6 to 10 months? Right now, honestly, I'll put it in a money market fund. Then when the SPX does a correction, so we have weekly chart here, and obviously it's way too hot. I think we correct a little bit. Then you want to consider putting it back on the SPY, just regular index, and let it ride. If it's just an amicable pullback with no news, with no disruption in the macro. If it is just an amicable pullback, you just put it in the SPY after that and let it ride all the way till the elections, if that's how the market is going to react. So you have to go with that assumption. If the pullback comes out because, we have a failure, or now the Fed is cutting rates, okay, you don't want to be in the stock market. You want to stick to a money market fund. But the reason why I say money market fund, because it's the flexibility. You can always get back and get back in. If you buy a bond, if you buy a T-bill, you want to hold it till maturity. That kind of eliminates the options that you have. Again, you can make $500, $400 if you just stick it to the money market fund. Maybe not the best option, but like I said, for now, entering right now, these readings, not a good decision. Let it cool off, do the correction, and then you want to enter with that money. Basically, Volcker equal Yellen, and JP being the guy that took out inflation. Basically, both people working against each other at the same time. You're right. Everybody been pointing out Jay Powell versus Yellen. And Jay Powell has been submissive to Yellen. She was his boss before, and unfortunately, again, Powell has this weak character, and he's not in charge. Yellen is. Hey Mav, I'm a bit late to this. You probably already covered the topic, but would you double down on Apple puts when it passes 180? Absolutely. If it does close, not passes, close below 180, then yes, absolutely, because it's going to unleash more selling just by default. eBay, is that still on track? Yeah, I think so. And if you followed the 47.45, it is really cheap. It's a cheap trade, and you can flip it into $3 really easily in a correction. And I think right now we should stick with that call. We might see eBay giving up here a little bit. Okay, before I go, folks, let's look at the SPY one more time. No resolution yet, but you know the numbers. You know what to do. We pass above 507.75 from the 3 minutes, 5 minutes preferably. Back on track. Grab the 508. Grab the 510 even if you'd like. But the 510, you probably want to close it before we get there, because we might not even get there by the end of the week. So you just trade them. You make 20%, 30%, you close them. If we pass below here, and the low was 506.81, then you want to grab the puts, and you're going to have the 506, 505 is where I would go, and just play those till the end of the day and close them. So you buy them for tomorrow's expiration, then you close them right away. The same with the 510 or the 59 if you decide, if we get that crossing. But for now, the SPY is not given a resolution here. It's stuck. Bitcoin, let's look at Bitcoin really quickly here. I don't think that Bitcoin is going to do anything today, really. Besides, it could flush down if the market flushes down. Because, look, it did try to give it a shot here to pass the highs, and it couldn't a few times. So right now it's just holding on to the lows. If it begins to take out the lows, we could see a flush down. But I think that would come hand in hand with the market, if the market does the same thing. Now, the Qs, it would just follow the SPY. It's the same thing. The algos are in charge right now. Q is a little weaker, but it's going to follow whatever the SPY does. The IWM will leave alone for today. I mean, you can argue that this is a sort of a falling wedge, and higher we go after that. So we'll just leave it alone for now. VIX, any update in the VIX? Not really, but if you see them buying the VIX and we go above 13.71 again, that would be a warning sign that tomorrow's session could be ugly, but my expectations will stay within range here. I don't see a move higher or lower in the VIX. Dixie, that's the one. Again, I mean, this move is incredible. Just to go down the PCE to come up like this, but it's becoming a little overbought. So I think if we pull back in the dollar a little bit, that's going to allow the SPY to make the cross above. So keep these setups in mind. And one more look at some of the morning brief trades. NEM, I think I want to hold on to that for a little bit because it's above 30.58. I think that the falling wedge is playing out. I want to stick with the NEM, even if the dollar goes higher by a little bit. I mean, if it did, I mean, it already did. See, the dollar went higher by a little bit. It did rebound. But NEM is really oversold to the point that it can outperform with the dollar going higher. eBay will keep those. I think the play is good. Amazon is the play that I'm worried about, and the one that I would actually suggest that we close. It could be back on track again, and if it does, we'll just put it back in, but just to be in the safe side. This could be a bull flag and higher we go. So I want to close the Amazon. And if you hear anybody in Discord asking about it, just let them know what we discussed here about these trades, because I'm going to head out in a minute. I'll be back about 11:30 Pacific time. Let's see if you guys got any comments or questions. Not really? Okay, so we're just going to wrap it up right here, folks. Thank you for being with us for the session, and we'll be back on track again and talk on Discord in the chat room 11:30 Pacific time. Thank you. Talk to you later again.